You know, every once in a while, the market throws a real curveball at us. A stock that nobody was talking about, just kind of sleeping, and then boom, it just explodes. Today, we are going to get into the anatomy of one of those explosions. We're talking about the company authID, ticker AUID. Okay, look at this number. This is what got everyone's attention. A jump of over 72%. In a market where, a couple of percent is a pretty good day, this is an absolute earthquake. But the really wild part? That's right. This wasn't something that built up over weeks or months. Nope. This was a full-on volcanic eruption that happened between the opening and closing bells. And it's the kind of move that makes everybody, and I mean everybody, stop and ask the same exact question.
So, what did just happen here? There wasn't any huge news, no big company announcement, which means the answer has to be hiding in the charts. It's in the technical data. So let's you and I piece this story together.
All right, to really get why this explosion is so mind-blowing, you first have to understand just how quiet things were right before it. We got to set the scene for how surprising this surge really was. So this slide right here gives us some really crucial context. Just look at that range. A high for the year near $10 and a low below $1. This tells us two really important things. One, this stock can make some huge swings. And two, it was trading at absolute rock bottom. It was completely off the market's radar. And here is the real kicker. Even after jumping 72%, the stock was still hanging out near its yearly lows. It was so beaten down that this massive gain was barely a blip on the long-term chart. So what on earth could make a forgotten stock like this just ignite out of nowhere? Well, that brings us to the bulls, the buyers. It wasn't just one thing. It was like a perfect storm of technical signals that all decided to flash bright green at the exact same moment. Look, if you remember only one thing from this whole breakdown, please make it the slide. Just look at the volume. The day before, a quiet 110,000 shares were traded. On explosion day, almost 300 million. That isn't just interest, my friends. That is a stampede. This is the engine that drove the entire move. And let's be clear, this wasn't just a few people day trading from their basement. Volume on this kind of scale is a massive signal that the big money, we're talking institutions, major speculators, they all suddenly woke up and piled in with just overwhelming force. So what were they all seeing? Well, for one, a classic buy signal called the MACD bullish crossover. Okay, just imagine you have two runners. One is the stock's short-term speed, and the other is its long-term speed. For weeks, the long-term runner was way out in front. This crossover is the exact moment the short-term runner just sprints past him, signaling a huge shift in power. For a trader, that is like a starting pistol going off. But it wasn't just the MACD. Oh no, it was a whole cascade of signals. The price completely shattered its 50-day average, which is a huge line in the sand for traders. The money flow index, think of it like a gas gauge for buying pressure. It was pegged at 99.7. That's basically full throttle. Then another indicator literally flipped its signal to up. You had all these different tools all screaming the same thing at the same time, creating this undeniable call to action. Go. But hey, in every market story, there are always two sides, right? For every bull, there's a bear waiting in the woods. And while all the buyers were having a party, the data was also flashing some pretty serious warning signs. So think of Bollinger Bands like a big rubber band that's stretched around the stock's price. Normally, the price is supposed to stay inside the band. But AUID, it didn't just touch the outside, it completely shattered it. A move this extreme is often really, really hard to sustain. And just like a stretched rubber band, the price has this nasty habit of wanting to snap back toward the middle. And this slide perfectly captures the whole conflict. The RSI, or Relative Strength Index, was over 70. Now, on one hand, that's awesome. It shows incredible buying strength. But on the other hand, any reading over 70 is technically overbought. It's kind of like an engine running way into the red zone. Yeah, it's putting out impressive power, but it's also a clear warning sign that it might be about to overheat. And the caution signs didn't stop there. Even with that huge jump, the stock was still trading below its major long-term trend lines, these big hurdles it still needed to clear. Meanwhile, you had other momentum gauges just screaming, hitting these maxed out levels that basically yell, too far, too fast.
These are all classic signs that a pullback could be right around the corner. So, what you have is this unstoppable short-term force slamming into an immovable long-term object. And that sets up a very clear battleground for what's going to happen next, with some really specific price levels we all need to watch. And here's the map, laid out nice and simple. You've got the ceiling, which is the big resistance test, right at $2.22. Then you have the floor, or the key support zone, down around $1.40. The fight for who's in control is going to happen right between these two levels. Whichever one breaks first is probably going to dictate the next big move.
And really, this one sentence just boils the entire situation down perfectly. This is the whole ballgame. Can the incredible power of almost 300 million shares in one day break through the heavy weight of a long-term downtrend? It is a classic Wall Street showdown. So ultimately, that's the question all this data leaves us with. Was this just a spectacular flash in the pan, a one-day wonder fueled by a technical frenzy? Or was that insane volume the signal that the whole story for the stock has fundamentally changed? The battle lines are drawn, and now we watch.